Good morning, everybody, to the morning meeting for all ARMR Insiders. As we know, we do this every morning. I'm going to share with you thoughts that are on my mind as this trading day gets started, trying to get us all thinking in the right direction, if you will. Okay? So, I've been walking the beach. I'm a little bit late to do this because I was really thinking this through to figure out how I can share with you my thoughts today. Okay, because it's a pretty big day. This isn't just a normal day. This is a day where I want to share with you how I'm going to be focusing my attention for the next week and a half. So let's start with this. The ARMR Investing Way has 3 stages. The first stage is building your whiteboard. It's the fundamental research part of what we do. And there's a time for that. When the market's crashing and you have a lot of cash, you can really focus on building your whiteboard. Listen to conference calls. Do your research. Get your proverbial ducks in a row. So when the time is right, you know what stocks to buy. So that's the time to focus on research. We always do the research, but that's a great time to focus. And then we go to stage 2. When we get a risk-on buy signal with the algorithms about the market itself, and so it becomes an execution time. We take what's on the whiteboard and now we focus on buying stocks and executing correctly. And that's what we did March 23rd, and in early April, we started taking things off the whiteboard and loading up the portfolios because the window was open to execute right? So now we have a couple of months of enormous gains. I mean, if executed correctly following the ARMR portfolios, you've got a couple of years worth of performance in about 2 months. Depending on how aggressive you were. So the third phase of the ARMR Investing Way is about managing risk. It's risk management research. And it breaks down into stop disciplines. Principal protection stops, raise stops, profit protection stops. The time to focus on risk management is right now. Now's the time to focus on risk management. We're still adding to the whiteboard, right? We're still executing using algorithms, of course, that always happens. But risk management is at the top of my mind at this moment. So I'm going to share with you why. These are all anecdotal things. This is not a market prediction. I'm not going to predict what's going to happen next. I'm going to talk about managing risk. Okay? Before I dive in, let me say to you, the mechanical bull market, it's not going away. It's in full force. I expect it to continue. That rip current of liquidity is not stopping. Okay? If we find out that it's coming to a halt, all bets are off. We have to change aggressively. Okay? Fed Chairman Powell is going to be speaking today. I doubt he's going to say anything that would suggest he's going to slow down the Fed's liquidity process. Okay? The reaction to the news today is going to be very key. I don't care what the news is. The reaction is very key. Obviously, if he says something hawkish like, we think we've done enough, the market's going to tank. Okay? I don't think he's going to say that. What's more important is he going to keep saying, yes, we're here for you. Yes, we're going to add liquidity. Don't worry, we're buying everything in sight. And the market goes down anyway? That's what we have to watch. The reaction. Not a prediction. Market might skyrocket today. I don't know. I'm not making a day trading call. I'm talking about managing risk. Let me tell you why top of my list to manage risk now. I believe the bull market, the mechanical bull as I call it, will continue, okay? But in the short term, I want to avoid air pockets that cause frustration and misery for investors, both you and me. okay? So what's happened that's made me feel this way? We're getting a number of market animalistic behaviors that typically call short-term tops. Now, calling a top's impossible because, I mean, the market could rip higher for another 4 or 5 days for all I know. But when you see stocks like Nikola and Hertz and Chesapeake skyrocket for no real investing reason, and no offense to anybody who's making money on them, I say, well done, make your money. Day trade them like crazy. I've got nothing, no beef with you, okay? But this is a comment on the animal spirits in the market. I don't care how great Nikola's truck is. Stock shouldn't go up 150% in one day. Obviously, shorts got squeezed, but exuberance is off the chart. Anybody listening to that CEO on CNBC, he told you they have to do a series of big capital raises. And he says, well, everybody opens their pocketbooks once they see that. Well, that's just total promotion. The stock will go down when they announce a deal. Okay? You look at Chesapeake and Hertz. These companies are bankrupt, and the stocks are going up 200 and 300% when they announce bankruptcy. It's as if people don't understand that the equity is going to be worthless. Is it possible the equity has some value when the whole thing is over? It is. There are some very smart hedge funds, and all they do is buy distressed debt and distressed equity. It takes a lot of research and know-how. Okay, and they certainly don't run the position up 300% in a couple days. Okay, so who's ever out there buying it doesn't understand capital structure. Company goes bankrupt, equity gets wiped out. Capital restructures, they come out of bankruptcy, new equity comes out. Not the old equity guys. They're done. Okay? That type of action in the market is not healthy. All right? I'm happy for anybody making money on it. I'm just telling you, that's the type of animal spirits that happen when nobody's really thinking, and that puts in a top. Then we go look at all the sentiment indicators, right? I mean, look, everything's wildly overbought. That doesn't bother me. Things can be overbought for a long period of time. But we're seeing VIX start to creep up. Okay? We're starting to see things that tell us the risk is very high. And I always share with you that when I buy something, I'm trying to put us on the right side of probabilities and statistics when reward is worth the risk. And at the moment, I'm not sure the reward that I might get on a trade or an investment is worth the risk of the air pocket that I feel is around the corner. So what I'm telling you right now today is that I'm shifting my trading desk from buying things to managing risk. I won't be buying anything between now and next Friday. And what I will be doing is raising cash where I need to, and I'll explain that in a minute. Why next Friday? An ARMR Insider, Chris, our resident options trader, thank you very much, Chris, for the information yesterday. He put into the room that there is an enormous amount of nominal value of the SPY calls trading somewhere, let's say around 280 to 300. Huge amounts of calls. And we have quadruple witching next Friday. I explained quadruple witching. I just took it out of Investopedia. You can see it right here, the definition in the memo portion of this video. So what we've got is the biggest option expiration that happens next Friday. Now, ARMR Insiders know, because we've traded gold together and we've invested in gold stocks together. Every month, at the end of the month, I come on here and say to you, okay, next week is the BIS options expiration settlement, and that always creates pressure on the metals. And it happens every single month in gold, okay? What I'm saying now is that the option structure for quadruple witching should put pressure on the stock market. How much pressure, I don't know. let's take a look at 2009 in the S&P. You can see here the gap up. That's the green box. Market gapped up, which is what we've done recently, above the 200-day moving average and taken off. Okay, so what I'm looking at now are these types of moves down, right? Market's up and then it sells off hard. Market's up and then it sells off down, this one to the 50-day moving average. All right, from 108 down to 102. Okay, these aren't huge moves, right? These aren't huge moves. That move is like only a 5% move on the S&P back then. But the moves we see today are dramatically more pronounced. So let's go over, take a look here, and look at today's action. All right. What we have here is a gap up just like an 09 above the 200-day. I don't think that gap's going to close. But just to put it in perspective, I think it was something like $1 trillion+ worth of notional value in the SPY call option complex right here at 280, which would close that gap. I don't think that's going to happen. Okay. There's more around 300, which makes a lot of sense. That's the 200-day moving average. There are gaps in the market. Guys, let me tell you something. Gaps usually get filled. Here's a gap here right around 311. The market's at 320 right now, okay, on SPY. There's a gap right here. Another gap, 308. The 200-day moving average is at 300. Okay? So what I'm saying is, let me explain why this happens. There's a huge amount of calls that are in the money. Massive amount of calls in the money because the market's ripped higher so aggressively. Nobody's really going to go out there and exercise all those calls and buy $1 trillion worth of the SPY. A trillion with a T. Okay? No one's going to do that. So what happens is the people who are in the money in those calls between now and not this Friday, but next Friday, are going to be selling those calls. And who's buying them? The market makers. Well, market makers don't want to own calls naked. They're making markets. So when they buy the call from you, they turn around and sell the underlying. Okay? So this could happen in an orderly fashion, or something could trigger a response that gets a lot of people to puke out their calls and book profits in front of the expiration. And then you get natural pressure and selling on the underlying as it's happening. Okay? So I don't know if that's going to happen. This is about managing risk. We have huge profits in a short period of time. So what I'm going to be doing in my portfolio for capital I manage is I'm going to be raising cash. And depending on what happens today with the Fed, I might be more or less aggressive at raising that cash. I'll let you all know in the Slack room what I think of what the Fed says and the reaction and what it means to me. You know, 3:30 today could be a very busy time for all of us. There are different ways to do this. You can raise cash by literally cutting every position down X%, and that immediately puts cash in your account. You're booking profits across the board, and you're not playing favorites. That's my personal favorite way to do it, because every single time I play favorites in my life. I don't know if this happens to you, but it happens to me. I pick, I'm going to sell this stock, but hold this one. The stock I sell goes up. The one I hold goes down. So the best way to do this, in my opinion, is to take quasi-algorithmic approach, right? I'm not predicting which stocks are going to go up. I'm going to say I need to have some cash in my portfolio so I can handle the swings. We want to dictate to the market. We don't want the market dictating to us. So what if we're carrying 25% cash and the market keeps going up? So what? We'll keep making money. We already made a lot of money. We'll keep making money. And we'll have that cash on hand for the rainy day. Now, once we get past quadruple witching, I'm happy to keep putting money to work. If there's been no sell-off, if the market just consolidates at a higher price, goes sideways for a week and a half, no big sell-off past quadruple witching, I'm going to be working on the whiteboard, figuring out what names I want to own, listening to conference calls, get past that period, I'll open the window and start putting the cash back to work. But I do think it's important that we recognize risks are a lot higher now than they were when we started buying this market on the 23rd of March. Okay? And I picked 25% out of a hat. You have to determine what works for you, what makes you comfortable. You can have 10% cash. You can have 50% cash. I don't care. It's your call. You could do it by cutting everything down an equal amount. You could do it by cutting out anything that's close to a stop, holding your best positions, cutting the stuff that's close to stops. That's your choice. Okay? I'm still thinking about how I'm going to handle my precious metals part of my portfolio. So I don't know about that yet. So I'm talking about all other positions that are not precious metals related. Totally possible the market sells off and precious metals reassert themselves. Those stocks have already had their correction for the last 2 weeks. So I'm really focusing on the rest of my portfolio and cutting down those positions. I'm not sure what I'm going to do. I'm not doing it first thing in the morning. I'll be sharing with ARMR Insiders at the end of the day how I'm approaching it for myself. But I want to put this on your mind today so you can think about it. And if the reaction to the Fed news is negative, then we know we're right. We know that people are selling on the news and starting to book profits in front of quadruple witch, right? And that could take a series of days. Market could gap up, could be up in the morning and sell off in the afternoon, be up in the morning, sell off in the afternoon. And then you have a gap down in a bit of an air pocket. Could happen like that. So it's not an all or nothing thing. It doesn't have to all happen today, but I wanted to put on your mind what's on my mind, which is let's focus on protecting capital for the next week and a half and see how the market behaves. Okay? Couple of quick thoughts. I appreciate somebody put into the Slack room last. Oh, you know what it was? It was a follower on Twitter, long-term follower on Twitter, not an ARMR Insider yet. I've become good friends with this gentleman, and he told me about Merrill Lynch, Bank of America, no longer allowing him to buy any U.S. cannabis companies in his equity account. And it included IIPR. Now, this is a problem for me, and I just wanted to share this risk with you guys. This is a risk. Here's IIPR. We bought the stock here. We're making money in the stock, okay? This is a risk on the stock. IIPR is the only cannabis REIT that trades on the New York Stock Exchange. They got grandfathered in. They literally listed. 3 months later, the window shut. Nobody else was allowed to list on the New York Stock Exchange that touched the cannabis plant. It's a risk that they get delisted. What's the risk? Tiny risk. I've known that the whole way up. We've made money trading the stock all the way up, but I want to make sure you guys are aware of it. When I speak to the management team about this risk, is it possible you'll get delisted? They say to us, they say to me, we can't promise anything, but having spoken to legal, there's no way to delist us unless we do something that the way to get delisted is, you lie about your financials, your business implodes and your stock price collapses, and so you're no longer meeting thresholds. Like there's a legal contract. Once you're listed, you can't just be arbitrarily delisted. So what would happen first is that the New York Stock Exchange would adopt a new rule that says if you touch cannabis, you can't be listed. I don't know if that's going to happen. I'm telling you, the risk is infinitesimally small. But I find it very odd that Bank of America Merrill Lynch won't allow people to buy IIPR, a stock that trades on the New York Stock Exchange. I mean, I get it if they don't let you buy something that trades on the CSE. And that wouldn't be, they wouldn't be the first company that have done that. I mean, Bank of New York Mellon did it last year. There's a bunch of companies that don't let investors buy U.S. cannabis companies that trade on the Canadian Stock Exchange. I get that. I totally don't get why Merrill Bank of America is not letting people buy a stock that trades on the New York Stock Exchange. Why does Merrill think they can tell you how to invest your money if the asset trades on the New York Stock Exchange? So I don't know if that's just a really stupid, ignorant compliance officer at Merrill, which wouldn't surprise me, okay? Or if something else is coming that we don't know. It's probably the former, but I just don't know, and it's a risk I want you guys to know. I'm going to cut positions down 50% on the stock right now until I figure out what's happening. I've got a call out to management, so when I speak to them again, I'm going to ask them the question again, which I've already asked them before, but I'm going to ask them specifically about this issue and see if they've got any thoughts for me. But I'm just booking half of my gain right now and reducing exposure until I figure out what's going on there. Not to mention the fact that I'm in the mode of protecting capital, and so that's a way for me to raise some cash. All right, and then just wrapping up, Groworks. Guys, anybody who's missed Groworks, you're going to get your shot. This is so exciting. So here's Groworks. Don't forget, we bought the stock down here for anybody who's, just to make sure you guys understand as I talk about this, we already have a huge gain in it, okay? Full disclosure. Stock's up big, all right? Now, the company just announced a secondary. It's going to increase their shares outstanding about 10, 11%. So theoretically, the stock should drop about 10 to 11% today. Right now, it's looking to open down only about 4%. All right, this will be the entrance. I'm so excited about this. Why? Because a new company, number one, they're going to raise money for them. They need, which is great. They have an opportunity to bring cash in and expand their business. That's always smart. But more importantly, I want institutional money looking at this stock. Institutions aren't looking at the stock when it's 3.5. As the stock gets closer to 10, more and more institutions start looking at it. And Oppenheimer is the lead on this deal. That's a great investment bank. I love Oppenheimer. They're going to bring in other investors. They're going to bring in eyeballs to this story, which we think is a big story. So ultimately, that's very bullish. For today, it should put the stock down. I expect 11%. If it doesn't do that, if the stock holds up and it's only down a couple percent at the end of the day, that's even more bullish. It tells you the demand for the stock. When do you buy it? I wouldn't add to it until the deal is closed and it gets priced. And then the window can open for you to add to it. So we'll have to see how fast they close this deal. There'll be an announcement that the deal's been closed and it gets priced. Even if it trades a little higher today, they could announce, okay, the deal's being priced at whatever, $6, and the stock could drop the next day. I don't know. I'm just making that up. I don't know what the deal price is going to be. But I'm just saying. So I won't be adding to the stock here. And if you've missed the stock from 350, I'm not saying buy it today, but I'm saying it's at the top of the whiteboard now. So when the deal is priced and it's done and it starts trading after the price, that's the day to start looking at it, start adding to it. All right, so I'll let you guys know what I'm thinking as it happens. Okay, I'll see you guys in the Slack room. Let's have a good day trading. And for those of you who get this, I'm going to sign off like this. Destiny is all.